Hey everyone, welcome back to Corporate Decoder, the place where we decode complicated corporate documents. Today we're diving into the shareholder report of Columbia Corporate Income Fund. And let me tell you, after reading this, I need a corporate decoder myself, especially after they tried to redefine the alphabet with all their indexes. It looks like the funds returned about what people would expect of bond portfolios. One interesting piece of information is that the fund management is changing its benchmark index for performance purposes. Also, there is information on specific bonds that contributed to or hindered performance. It seems this is very much a fund that depends on its bond picks. Before we get started, if you like getting straight insights from corporate documents, make sure to subscribe. Also, we have a Discord community that I will link in the description below for additional discussion. First off, this is a certified shareholder report, meaning it's a formal document filed with the Securities and Exchange Commission. It's like the company's official report card to its investors for the past year, in this case of the reporting period ending in April of 2025. Also, the document gives important dates as well as phone numbers for the customer, should they need it. Looking at the fund cost, Class A shares cost $89 on a hypothetical 10,000 investment, or 0.86%. But look at the institutional class is much lower at just $63. Basically, the higher the share class, the lower the cost, which may be worth it. Now let's check out this fund's performance. Class A shares, including sales charges, returned 2.404% over the past year. The blended benchmark of 85% Bloomberg US Corporate Bond Index and 15% ICE BOFA US Cash Pay High Yield Constrained Index performed a much higher 7.76%, and also the main benchmark did better at 7.76%. And also the main benchmark did better at 7.76%, and also the main benchmark did better at 7.60 than the fund. And here's where things take an interesting turn and where I make my smirky comment. There is a note here that says that effective August 1, 2024, the fund compares its performance to the Bloomberg US Aggregate Bond Index, a broad-based performance index as required by new regulatory requirements. But also note that fund's performance also continues to be compared to its prior benchmarks, which management believes more closely reflect the markets. It seems like they're going in with a benchmark that makes it look good according to regulations, but they also want to be measured against a benchmark that better reflects the purpose of the fund. It is worth mentioning that the Bloomberg US Aggregate Bond Index is at 8.02%, above the blended index and above their own performance. Looking at key statistics, the fund manages almost $1.8 billion in net assets, has 6,888 holdings. Management fees added up to about $8.8 million, representing 0.49% of the fund's average net assets. The portfolio turnover is 90%, meaning the portfolio managers trade more than 3/4 of the portfolio every year. Now let's look at the top holdings. The biggest position is Principal Life Global Funding 2, bond making up 2.1% of the portfolio that matures in 2029. NewSource and Verizon bonds are among the other top positions. Taking a peek at where their assets are, this is mainly a risky corporate bond portfolio, with 91.6% spread across many corporate bonds. In terms of ratings, about 90% are AAA to BBB bonds, and there is a bit of 8% sitting in speculative grade BB or lower bonds, as far as credit quality goes. AAA is a top quality bond with little credit risk. There is not much else. That means this report will be pretty one note, as most of the other versions that followed and mirror the initial one. Of course, it is an SEC filing, so it comes with some interesting legal items. There is a code of ethics disclosure, which is pretty standard. It basically states the company has a code of ethics that applies to its top officers, and they had no amendment to the code or waivers granted during the reporting period. Next up, we have a list of the folks determined by the fund's board to be audit committee financial experts. These are J. Kevin Connaughton, Brian J. Gallagher, Douglas A. Hacker, David M. Moffat, and Sandra L. Yeager. And that's good to have this list and know who's in charge of keeping the financials honest. Then auditors got paid around $30,000 for checking the books and about $13,000 for tax advice. Also, the investment manager was billed nearly $500,000 non-audit fees. Seems like they are being well looked after, as well as a section going over pre-approval policies and procedures. At least it is good to know they have the processes in place to make these payments. Now, after that, we get a giant list of all the investment in securities of unaffiliated issuers. Going into a portfolio investments breakdown, here is my take on this data dump. From an investment strategy, it is mostly corporate debt with high weightings on bond picks. The main takeaway is that the performance depends heavily on their security selection, which means individual picks matter a lot for this fund. The difference between the blended benchmarks versus their own performance really makes it seem that way. Even fund itself admits this, as the document mentions some of the top performance contributors and detractors. The change to the broad Bloomberg benchmark is something to be aware of, as returns will be compared to that. Regarding risk, the fund faces a very standard credit risk due to investments in corporate bonds, plus normal interest and market fluctuations. Overall, this looks like an actively managed bond fund with a fair amount of risk and corresponding reward that depends more on the managers picking the right bonds more than usual. Alright, that's our breakdown of the Columbia Corporate Income Fund. Do you think these active managers are worth it versus just holding the general Treasury Market Index? What are your thoughts in the comments? Hitting that like button really helps, and subscribe for more deep dives. And as I stated before, be sure to join the Discord using the link in the description. Thanks for watching. See you next time.